The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Hi, everyone. Basil Chapman sitting in for Kate Stalter. The voice will be a little lower, and it's my pleasure. I'm actually part of the team here at TFNN. My show is usually the Monday, Wednesday, Friday Tiger Technicians Hour, 11 o'clock till noon at this particular time. Kate does the Tuesday and Thursday show at this time. Of course, we have full programming here from 9 o'clock in the morning Eastern Time until 11. You've got Steve Rhodes, and he's joined by Tom O'Brien at 10 o'clock. Fabulous show today, as usual. And then at 12 o'clock on a Thursday, you get the Commodities Hour with Larry Pesaventa. And believe me, so far, his insight and his target areas of time in terms of looking at the cycle dates has just been spot on, and we're going to see how the market goes in the next 2-3 days, because I'm sure he'll want a little bit deeper of a correction to be able to really fully appreciate exactly how accurate it is. So that's going to be interesting listening to Larry, and of course all those commodities are moving around, so we want to hear about that. And we just have full programming here. We've got, today's Thursday, I think, let's see, so Larry's on at 1, and then I believe we have, you know what, I'll have to ask, I listen to him as many as I can, but just to get the order, we've got Dave White, we don't have Ken Shreve, yep, we have Ken Shreve, and I think Daryl Martin. Yep, those are the people. So, and Dave is at 2. I just wanted to get the times. I knew who was what. So, a full programming day. 877-927-6648. Enough talking. Let's go straight to the markets. Now, I'm going to show this chart just for a moment, just to show what my subscribers get. I show the every morning when I send my Tiger Minds, a daily newsletter, when I send my opening call out to my subscribers. They get a very detailed look at markets, and I go through stocks from whether they're dollar stocks or $600 stocks. It makes no difference. It's the chart patterns that I look at. And yes, Stacey, on Monday, Wednesday, Friday, and I'm sitting in for Kate. Question in the den. So the EU, that's the ESU 12, that is the September E-minis, had a fabulous U-shaped pattern, went to 1385, pulled back, then 1387, and now has come back and all the way, and it needs to hold 1357, which is the 200-period exponential moving average, and I show this to subscribers every day as part of all the other stuff that I do. Very detailed report of the markets and the different indexes, different levels to watch, etc., how to use the volatility index, the ARMS index, that's the TRIN, I use it in a special way, etc. Now what we're looking at, I'm going to get out of this because Kate does not usually talk about the futures. So I will get out of this right now, and I'm going to go to close the workspace, yes to all, and I'm going to go right to, oops, it's not quite fitting the page. There you go. Get that down a little bit. Just trying to get this to fit the page beautifully. There you go. Now I'm going to add a white background chart. The reason is I've been asked by many people because they like to print out my charts, and the black charts, you can't, it's expensive to print out, first of all, but secondly, all the different moving averages that I use, etc., don't always show up in the correct colors. So what I've done here is I've got, I'm going to go to the IWM, and I spent a lot of work for my subscribers on the weekly chart of the IWM. But let me explain. The IWM is the Russell 2000 ETF. It's the iShares. It's the trading vehicle. You can go long, you can go short. It's just it approximates pretty accurately the Russell 2000 index. Now what we're looking at is the daily chart. Now I have a particular methodology. We all have methodologies here at TFNN. My particular one, and I discovered decades ago, identifies the lowest, most obvious low bar. This is a simple way of telling you the story. And then from there, you can go at least 4 peaks higher if all the different aspects are together. That's the chart patterns. That is the moving averages if you want to use them. Different techniques. I use the MACD and the slow stochastic standard measurements. That's 12.26.9 for the MACD. Slow stochastics 14.331 and 20% and 80%. I use the 9-period exponential moving average, and then I might add any others that I'm experimenting with, but the 9 is very important, and the 200. The 9 is the purple one here, and the gray one is the 200-period exponential moving average. They're only needed when they're needed. Now, let's go through this. From the low of 66.62 on the 25th of November, there was a spiral to the upside. It's even a gap. Goes to the upside, goes to 75.39 in December the 5th, pulls back, and then starts a brand new buy mode. And it goes A, B, C, D, A, B, C, D, E, F, G. It's unusual, but that's the part of the pattern. Pulls back and then goes A, B, C, D. And what does it do? It makes a top on the 27th of March at 84.66. It pulls back. I haven't typed this in. Trough A, trough B. On the way down, we call them troughs. Trough C, trough D, trough E. This will be the wrong color. It's okay. And what happens after that? You get to a trough in the IWM on the 4th of June at 72.94. And what does it do? It goes those requisite 4 peaks to the upside, but it fails to make a left side, right side price time match, which is usually a negative thing, to the 82.97 high of the 1st of May. So the arch pattern kind of fails, and it pulls back, and what does it do? It pulls back, making lower lows and lower highs. If the IWM takes out 76.22, today's low is 76.27, that'll define quite clearly a downtrend that's making lower highs and lower lows. Okay, that's fine. Now let's go to the weekly chart, and this is what I spend a lot of time on. In the weekly chart, that's like the sandwich. The ones on the left here, if you're looking at if you're looking at my charts in Tiger TV, you'll see the one on the left is usually almost always the daily. The one in the middle is the weekly. The one on the right is the monthly. And the thousands of charts that I've done, including 120-minute charts, have the notation which I've done by hand. Why? Because so far I found that the software that I've experimented with does certain things great, but it is the human element, that the stuff that the eye can tell in a fraction of a second what a machine has to scan back and make decisions about. And that to me has been the most difficult thing. Now on the weekly chart, look how many peak Ds there have been. You remember the objective of the Chapman wave? To get you to a peak D and then other things take over, but at least to the D? That can be a fantastic move. Now look what happened for 34.26 on the low of 34.26 on the week of the 13th of March of 2009. It went ABCD, pulls back to 62.61, pulls back, goes to 74.66, peak D, pulls back, goes to 58.60, week of the 9th of July. What is that? 2 years ago exactly, almost to the day. And pulls back, and then it goes ABCD, ABCD, 2 consecutive ABCDs with something I call the instant restart. Now I'm going to expand this. I'm not going to make it very complicated. Kate does a different thing entirely with Investors Business Daily. Her technique embraces other parameters, things that she looks at. I'm just showing you what I've done. I want you to get a feel for what I'm looking at. And there's something I call the Chapman wave flat-based restart. I'm going to send this. I've actually sent this off to some people. I sent it off. Some of my master trader students asked me about this particular tech. If you can identify this Chapman wave flat-based restart, it is incredible. Why? Because it means you've got to have patience. Because when the sell signal is triggered from a P, D, E, or maybe even an F, and the MACD and stochastic are failing, which is exactly what the cyan line shows back in May of 2011. Not only will the price come back to the low bar where the starting point was, in this case 76.95, week of the 28th of January of 2011, it'll go under it. So it goes right towards it, and then it has a false break to the upside, fails at a peak A, it comes out, and it smashes through and goes down to 60.09. Another technique that I use, by identifying the particular candles or low points, you can go from a left side, rest side price time match, and what does it do? It misses the 58.80 low from way back in, that was August, was it? August, the week of the 27th of 2010 at 56.80. It gets to 60.09, and it starts on the week of October the 7th, 2011, another buy mode. Where? To ABCD. But then it pulls back just a tad, and the MACD isn't quite finished going down. The stochastic is, that's the heads up, and it pops to one more high. It goes to peak E at 84.66 the week of 30th of March 2012. Then it pulls back, but it pulls back to a support level at 72.94, rallies, and then it fails. So far it looks like it's failed at this peak A. Just as you had a peak A that turned into peak A minus, that high of the week of the 8th of July 2011 at 85.97. I suspect we've got exactly the same thing happening here. Why? Because the fast-moving average, the green line, is deflecting below the red line. There's that yellow line that matches the yellow vertical line, that matches the yellow vertical line. Cyan, or light blue, yellow, cyan, light blue, yellow. And if you start to make lower lows, as I said in the daily, if you go under 76.22, suddenly the low bar of 72.94 from June the 8th becomes a target. And the stochastic failed completely, just as it did back in July of 2011. It's so far fading to get to 80%. It's a 60.90. Good. Let's look at the... So what would change this? It's very simple. A rally above 81, 84, and I have to say, completely different chart patterns unfolding. Meanwhile, back at the ranch, we've got the monthly chart. I'm stretching it out here. The monthly chart, which had a low back in 2002, October, 32.30, goes through an ABCD, pulls back, starts a brand new ABCD to 85.20, makes a cup formation, left side, right side, price time match, almost to the penny. It goes from 85.20 down to 34.26, March of 2009. Where does it go to on the upside? 86.82, $1.50 above that previous high, pulls back, can't take the strain, makes a cup, potential handle, but it looks to me like it's probably going to fail. So the IWM says, be very careful here. Don't listen to what Druggy and all these guys are saying. Look at your charts, trade the charts, and we'll go back, go through numbers, and go through charts that I know that Kate has mentioned before. We'll go through those in the Small Cap Roundup. Basil Chapman sitting in for Kate Stalter. My pleasure to be here. I'll be right back at 877-927-6648.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting in for Kate Stalter. Remember, my service is the opening call, and I'm here Monday, Wednesday, Friday at this particular time. And my show is called the Tiger Technicians Hour. My service is called the Opening Call. And let's go back to the stocks. So first of all, the euro is getting pounded. When I had a caller last week and we were looking at the euro USD, the currency pairs, I was saying there's a good chance it's going to try for the 1.24 area, which is the 9-period exponential moving average in the weekly chart, and lo and behold, today it hit that exactly. It went to 1.240.42. Where's the trading now? 1.214. That is an incredible move to the downside. One of the sharpest declines I've seen in the euro in quite some time. Not good. Now, I wanted to go through a couple of things. I just wrote a whole bunch of stocks letters down that I remember, and Kate talking about. These are things that I've looked at. One that I would like to look at, because I believe earnings came out today, is RGR, which is Sturm Ruger, the guns and ammunition. Actually, they call it recreational components. So Sturm Ruger, you remember the technique that I discussed about going from a low, most obvious lowest low bar? Well, RGR is the symbol. It's trading at 42.80. Now listen to this. It made a low of 34.22 June. The last move was June the 8th in the daily chart. It goes to peak A, B, C, D. Then there's a technique that I call the instant restart. And you can see the plus sign at the top, plus sign at the bottom. And I always circle it so that my students can see exactly, my subscribers can see exactly what it does. It's within 3 bars, it breaks to a new high, then it gets a parallel wave count. Now, this is a little unusual because the following peak A the trough after that went below the start of what it looks like for peak D. I discussed that in detail, and I'm going to go through it. I'll probably show subscribers this at some point in the next week or so, how the instant restart, there are 2 kinds. There's one that's a very clean one, and there's one that's, I wouldn't say obscure, but everything about it says that that's what you've got to consider, that it's a parallel wave count. I don't want to get into that. Meantime, it goes another peak, A, B, C, D, goes to a doji top. I love to look at candles. Now, what's really important, I know Kate has mentioned this before, she has mentioned that she does not look at round numbers. I happen to look at round numbers because I've done this for a long time. And round numbers was what allowed me to say on October the 19th for my clients at the time on the 20th of October 1987 after the crash, that the round numbers that showed up in all the stocks, especially the big caps, the General Electrics, the GMs, the DuPonts, United Technologies, Triple M, the round numbers intraday, at the open, at the low, at the close, said to me that was just institutions cleaning out the cupboard, just saying, get me out at 48, get me out at 44, get me out at 36. They didn't have time to say at an eighth. Those days you spoke about eighths. And I used that for years and years. I've used it. I used to have another particular technique that I used when I used to hand chart. So now what I'm looking at is there's a round number, but it's a silent one. It's one you can't see. Why? Because the high in RGR was at 50.88, but the low was 48. You couldn't scan for that. If you looked at round number highs or round number lows, you wouldn't scan for it. So it's a particular technique that I developed over the years. And there are so many stocks that have done it just recently. So look what happens. 48 is the number to watch. If Sturm-Ruger closes above 48 at any point, it could go even a lot higher. It traded at 50.88 just a few days ago, 3 days ago. Today's low is 42.19. So that's his. Just be very careful. The weekly chart made a peak E. Remember, I said peak D, and occasionally you can get another count. In this particular case, it went to E in the daily, extended up a little bit more to the 58.42 level, and that was back in May of this year. Then it pulls back to a doji candle at 34.22. I don't see any round numbers at the low. Oh, there it is, 41 open. 41 open. The moment it goes above 41 open, it can go quite a lot higher. That's exactly what it does. It goes to 50.88 in the weekly chart. Now it's about to test the 9-period exponential moving average. Before I say anything about RGR in terms of buy or short or doing anything else, the monthly chart went to a peak F. A peak F in the Chapman wave it's devastating. If you want to look at peak Fs, what they've done, look at the Dow, INDU, when it went to a peak F top back in October of 2007, a doji top at 14,198. Look at CMG. Goes to a peak F doji top at 442. Opens with a round number 417 2 days later. This is the monthly chart. This is very interesting. So, that's the music. All right, Basil Chapman sitting in for Kate Stalter. I'm going to look at a number of other stocks. If we get a chance, 877-927-6648. It is the Low Cap Roundup, and I'll be looking at a lot of low cap stocks as soon as we get back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I'm Basil Chapman, sitting in for Kate Stalter and Small Cap Roundup. And what I need to do is, let me just double check. Yeah, that's right. Sorry. So I wanted to look at a couple of stocks that I know Kate's looked at before. And one of the things, actually right now I have is corn, which is a low, I think it's a low cap ETF. But in fact, corn is making a peak D top, and finally you're getting a bit of a pullback in corn at the peak D in the Chapman wave at 51.37. And we're going to watch that because the weekly is still really strong. All that, problems with corn is serious stuff. So if corn, I suspect that the worst case is the corn, CORN, that is, will trade into the between 49 and 47 to try to fill some of the wick of that candle on the 24th of July. However, let's go straight to the stocks that I know. I've heard Kate talk about. Beacon is a stock that I know that because we had it in my portfolio for my subscribers at some point. Beacon Roofing Supply Inc. Now this is very interesting because there's a technique that I use that essentially makes the charting as easy as possible. And what happens is when I identify peaks of importance or troughs importance in a rising pattern, higher highs, higher lows, higher highs, higher lows, or lower highs and lower lows, I draw a trend line. And, channels, everybody talks about channels. Everybody's got different ways of drawing a channel. I have a specific way of drawing a channel. I like to get the most important 2 2 rising lows, or 3 preferably, or the highs. And from the one that has the most, I will draw I have a software, so I can just go click new parallel and pop, it goes in. But there's a technique that I've developed over the years that says, not only can you have a channel, you can have an inside track. And what is an inside track? An inside track is very simple. It means that there is always a level, like a go-kart in a particular channel. There's a level where the price can bounce away from. So it gets repelled from the top side, it gets propelled from the bottom when going up, and on the downside, it'll be the opposite. And look what's happened with BECN, Beacon Roofing. That's BEC for Charlie, N for Nancy. It went, once it made a low of it made a high of $28.97 back in May of 2006, plummets to $6.70. I'd call that a plummet. In January of 2008, and then it starts making higher highs and higher lows. What you can see is I've drawn a red and a green line. If you're looking at Tiger TV, you will see the red and the green. If on the bottom it goes under the red, that's very negative. If it holds between the green and the red, that's the propellant zone. And then you look at the top side, and that's been the repellent zone. And look what happened. Beacon Roofing went peak A, then a B hit 18.74 in September of 2008, pulls back, goes to 23.11, April of 2010, pulls back, and now I've got myself a very nice up channel with an inside track. I call it the Chapman Wave inside track. It goes to a peak D at 23.54, pulls back, the slow stochastic and the MACD turn down, so I have no choice but to put a down arrow, but then it spirals higher, what I call a right arm extension. It goes higher with the technicals confirming, but then the stochastic pulls back, and now what it's done is it's gone to an E and then a very quick peak F. If there is no new high above what? The 28 round number high that was made in July of 2012. The 9 period, that's the white line, 9 period moving average, says be careful. Now the reason why I want you to bring this up, because it goes together with the housing sector. It complements it very well. Made a double top at $28 in the weekly chart. Look at the lousy technicals, and look what happened in the daily. So you've got F, peak F in the, whoops, let me get that right. You've got a peak F in the monthly. You've got a D in the weekly and a D, peak D in the daily. And that says, whoa, be careful. You're going to test the 200-period moving average. And it does exactly at 23.73. The low yesterday was 23.68. Low today is 23.71, slightly higher. MACD is stochastically terrible. So the big thing about this stock is it better hold 22.55. When I mean 22 hold, I mean it must not close below 22.55. If it does, then all of a sudden the weekly chart kicks in and says, uh-oh, that 22.55 level is the low of June 2012, and there is very little support under it. So I'm watching this and I'm saying, I would not be a buyer of this at all right now. It needs time, it needs price, it needs to build some kind of a base. I'm very concerned about it. I'm just quickly going to put it together with the ITB, which is the U.S. Construction Index, which is having a nice session today. Now that has a slightly different chart pattern, even though it made a high just recently at a peak double top at 17.30 and then 17.31. So I'm watching this real closely, because if this starts to hold, it's at ITB is the iShares, U.S. Home Construction. If it can hold, if it breaks underneath 15.60, it's at 16.23 right now, that's not good. If it can hold you, it can go sideways a little longer, and that'll be quite good, because that would put us together looking at the HGX index, which is the housing index. And here again, a very sharp pullback, but it's only going to within that whole consolidation area. I don't want to mention, get people confused. I call this the stork leg formation, long leg up, a body, an oval body. This is the HGX housing, Philadelphia Housing Sector Index. Breaks out, makes the neck, makes the head at 140.04. No, it goes slightly higher, 140.97, and then pulls back. And this is the most important, because 117 will be the level. It's at 130. If the HGX breaks under 117, that's a problem. So, I'm looking at this and I'm saying, housing sector, just a pullback so far. The monthly chart is still spectacular, so I'm going to watch this closely. And then there's a candle that I call the Chapman Wave Roman candles. It's one of my techniques, and that's the candle of June. Opens at 124.49, goes slightly higher to 136.94, powers down to 112.21, but then closes quite nicely at 136.94. If that wick is broken, if the housing sector index goes anywhere towards 121, the entire wick can be tested down to 112. So it's really important that the housing sector index starts to get back to the 136 to the 137 area over the coming 2 weeks or so. Okay, now, so I spoke about the IWM. The parameters, let me go through that one more time. The parameters that we're watching in the IWM is, if the IWM breaks underneath 75, it's a 76.47. If it closes on a weekly basis under 75, 75.42 is the level, but I'm saying 75.20. If it closes under that, 71.83, it would be a target on the downside in a new down channel. The monthly chart has got an asymmetric, it's got a symmetric triangle. I don't want to talk about that just yet. It's not as important because the technicals have not been good. The price is held. A lot will depend on the weekly chart, and the daily chart says, still early in the day. If this is what you're getting in a bounce that failed, be very careful, because the low of, it's not even the low anymore. The low of 76.62 is now the low of 76.27, below the previous low on the left side. That says be careful, because the left side, right side price time match goes to the third. That goes to tomorrow at 74.13. Now, some of the stocks that I've heard Kate talk about, other stocks spoke about Stormaruga. To go with that, let's just look at SWHC. Why? Because that's also in the ammunitions area, which seems to have been on a tear lately. That has gone to a peak F. Smith & Wesson Holdings went to a peak F at, it's a little squashed. Let me get this opened up a little bit. It goes to a high of 10.25 on the 30th of July, 10.22 on the 31st, but a round number open of $10. If SWAC is not able to close above $10 in the next 2-3 days, got to be very careful, because the wick of the candle of the 12th at 8.63 would be a target on the downside. And even more important is it's making an alternate wave count in the weekly. So I'm watching this really closely, because it's been a fabulous stock. This is one that we had a very great profit in some time ago. Got out and just couldn't get back in, and it ran all the way to 10.25. That's what happens in stocks sometimes. Now, let's go through this. So that's Smith & Wesson. Yelp came out with good earnings, I believe, today. Yelp.com, is it? Yelp Inc. This is kind of a search engine. You click on it and you can find restaurants and gas stations, all sorts of things. So it's an IPO. It came out back in March of this year. It opened at, this is one of the few, actually. Let me just go back to the opening day. This is one of the few, if I recollect correctly. Yes, 26. Almost all IPOs the very first day have significant round numbers. Those round numbers are really important. Why? Because very often, if they close above the round number of the first hour and a half to 2 hours, that says, this is a good stock. You can go a little higher before it pulls back. They almost always pull back to test, because that's just the first day of the initial outgoing public visual representation of what has been a closed stock. And anything can happen. Usually they pull back. Well, it went down to 22. Then it pulled back to 1936. Was that the low? 1950? 1950? Yeah, 1936 was the low on March the 6th. It runs up to peak C and then fails to peak C minus the 31.96. So it breaks over the 26 high bar. Then it starts a descent that took it all the way down to $14.10. Now it's gone peak A, B, C, D, to an E if you're looking at the daily chart in the Tiger Technician in the den, or if you're looking at Tiger TV, it goes to 27.74 on the 5th of July. Then it pulls back. Well, it pulls back and tests the cluster formation that it made back between the 8th of June and the breakout on the 15th. It tests that, breaks above the 9-period exponential, the 200 period, that's the blue line, moving average. And now this is going to be interesting. Why? Because if Yelp, now this is one I would keep my eye on. I like the action of Yelp, but in this particular market, this is what I'd be looking at. Before I even nibbled on a stock like this, an IPO that has not really been tested, I want to see if in the next 3 days it is able to close above the doji candle that opened at 24 round number on the 20th of July, made a high of 24.73, went to 23.79 and closed at 24.05. That's the candle. If it can do that in the next 3 days, close above 24.73, I'm impressed. I'm impressed, and then I'll wait for a pullback, and I might consider for subscribers that it's a short-term trade. Reason being, it's got a long way to go to make a leg D up above 27.74. 1 penny above starts leg D. If at any point it takes out the low of yesterday, 18.52, 4 points lower, but this is the market that can do it, I don't want to even look at the stock for quite a while. Another thing is that the monthly chart is showing some positive signs with today's action, but we're the second day of a new month, so we can't even talk about the monthly chart. So Yelp is on my list of a stock that has a potential to be able to do something on the upside if certain conditions are met. Now, there's a stock that I remember talking about, and I thought I saw this in the Investors Business Daily. You know, that's the school that Kate comes from, Investors Business Daily, just like Ken Shreve. They do fabulous work based on the Investors Business Daily techniques that they've studied over the years. Well, FELE is Franklin Electric. Franklin Electric is a water and fueling systems company. It's not yet made the left side. Let me just type this in so you can see. Left side, right side, price time match. It has gone. Oh, I didn't do that. I did it some time ago. Let me just see if I can do it quickly. That's A, B, C, D. Call that D quickly. Start a new one. And that goes A, B, C, D. Call that D. Start a new one. A, B, C, D. Goes through a peak E in the monthly chart. So there are 3 peak Ds, and then the one extends with the right arm. I always raise my arm. A right arm extension. That flurry of activity to that kind of a high, that right arm extension, where the technicals are not really supporting it, says be really careful. Why? Because you can see in the weekly chart, right there, I haven't finished the work on it, pity. Well, what I wanted to say, you can see in the weekly chart that the technicals are starting to fail. Now what's happened, the technicals say the weekly chart has gone to a peak C. Doesn't it have to go to a D? Absolutely, but not if it is significantly, there's a significant left side high, which is 60.70, 62.95 from April of 2006. So this is a stock that has held really well. I would consider the stock if the market continues to, Dow's down 142, S&P's down 16. Lousy day. I'll talk about our positions in my opening call as soon as we get back, and the stock of FELE, Franklin Electric, as soon as I get back after this break for the final segment.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Sitting for Kate Stalter, and once again, my service is the opening call. It's a daily newsletter, very full service. Every day I go through charts and charts. I show them. I show the techniques we use. Now, what's very interesting, we've been long and short with a preference for the short side. We did have GE and the TBT as a long just a few days ago. We took profits this morning because I raised the stops and we got stopped out. But what's really interesting about this is that looking at the market overall, we are starting to see the sector breakdowns. You remember, I don't know if anyone had if you listened to my show, but when I've subbed for Kate before, I'd mentioned that the sectors I was looking at that were very weak: the retail sector, that's apparel sector, the auto parts sector, and basically the food, anything to do with the restaurants, apparel, and the spare parts that were really, because people kept their cars longer. But at the same time, there was a dichotomy, because I had spoken about, so in those sectors we got shorts that have been working beautifully. Core positions actually, and added to them and taken profits, etc. But what's really interesting about this is that the bonds Well, I've got a chart up here, FELE. I was talking about Franklin Electric. I wouldn't be doing anything yet. Let's just see, it's at 53.50. If it can test between 51 and 49 sometime this month, and then close above the 9-period moving average of 50.59, that'll be impressive. But it did make a peak F-top in the Chapman wave. Not only that, it did this with, it opened with a round number 58. This is the most recent high. After being down in the 19, 18 area, it goes where? To 59.88 with a round number 58 high, peak F, long-legged doji, and the long-legged doji says, don't worry about this. You'll have time to reshort or buy it if it's on the downside, because this particular candle that I work with a lot says that the body of the candle will be retested and then it'll go in the direction that it was heading in the beginning. That's exactly what it's done. Made a little U pattern, a double top. Now it's broken down completely below the low of 54.87 made on the 19th. This is not a good sign. So now I wanted to do a couple of things just as we're wrapping up, because this is very serious stuff. Down 157. The TLT, I've spoken about this for a long time, my three bears. The bonds, I call them Bondi, the VIX, the volatility index, VIXI, and Dolly, the dollar. If those start to move higher, there's a problem. If the volatility index climbs into the 20s, be careful. That's just selling pressure. Where is it now? The volatility index is at 19.15. It was pretty much ignoring everything earlier on. But right now it's at 19.16. It said, and the Dow's only down 161. So it says if there is a reversal to the upside today, who knows, that could really help the volatility index to get back to the 18s. But if this continues into the close, I would not be surprised to see by Friday the volatility index testing the 200-period exponential moving average of 20.82. That's going to be serious stuff, getting to the 21s. Now, and bonds, the TLT, let's go to the Lehman 20-year T-bond fund. The TLT is at 130.53. It's walking the 9-period exponential moving average in the weekly chart, and the MACD is still good, and the stochastics at 88%. That is really important. So if bonds take out, if it does it this week, that's one thing. If it takes it out next week decisively above 132.21, that's leg E to the upside. If it does it this week, it extends leg D. I'd be very careful, because the monthly is still only a leg C. That says bonds could go high. Just be really careful on the long side. Tighten your stops. I'll be back tomorrow for my show at 11 o'clock. Thanks for being here, and I'll be interviewed by Tom O'Brien this afternoon at 5:35. Thanks for being here, folks. I appreciate it, and thank you for Kate and for allowing me to be here to sit in for her. Have a great day.